Good evening. This is the Elliott wave update for the S&P 500 for Thursday, April the 7th, 2022. Interesting day in that I am continuing to run both the preferred view and the alternate view, or scenario 1 and scenario 2, in parallel with each other. But we are now at a point where one or the other is going to take precedence, and then we should see the following follow through. So the S&P looks to, or just to review very quickly, the preferred, the scenario number 1, that the market continues to have completed their all-time highs at 4808, and that completed intermediate 5, primary 5, cycle 5, and super cycle wave 3. Then coming off in the initial, what I always start as a 5-wave decline, this time it's on an intermediate degree thus far, that we have done intermediate wave 1 complete. We remain in the process of tracing out an intermediate second wave bounce, counter trend rally, counter trend move. And that has consisted of an A wave, which topped out at 4,631. And I believe we likely completed the B wave today at, and I'll just go down to that hourly so we can see it, at 44.44. It was really quite amazing. That was the support. It held it. Held it once before, held it again. And so it completed the move there, put the minor wave B, and the rally was stronger than what we got off of it yesterday. So that gave it a little bit more strength, that it likely completed this minor B wave, and we're now underway in a minor C wave up. I'm going to go back out to that daily to complete the intermediate wave 2. Now, early projections suggest that the market can come up, and a Fibonacci basis can come up to 4,778 and not break any rules in terms of a wave 2, cannot exceed the price territory of wave 1. If it does, it's not a wave 2. We've got that covered. I'm going to let this start to unfold before getting into scenario 3, which again does go in parallel with the other 2, but basically more in parallel, of course, with scenario number 1, the preferred view. So if we get above here, I will lay out all the balance of the potential, because we must consider that if wave C is going to equal wave A, we're at new highs. If it's an irregular B wave, we're going to 5,000. These are all possibilities, okay, if scenario 1 is indeed in force. We're still going to track it along. And even along the way, very tradable, lots of positions to put on. It's not that hard to try to even just put on some vertical spreads that would take advantage if it ran. If it broke above 4,631, you could find some cheap vertical calls. Vertical call spreads. Whoa. Hopefully, premium is going to be to the upside, but hopefully be able to get something on. So you're not actually, you're participating, but it's not your big play. You're going to continue to trade often, trade small, but you put on positions that are effective into the direction that you're going, and you're still taking advantage of premium, hopefully. Now, what we'd be looking for is for the continuation to just break above all the moving averages. I'm going to go back down to that hourly, see where we stand. We got the 200. Basically kind of the stick in the mud thus far, because we got up and we touched it this afternoon, came down pretty hard actually, and then kind of just are still waffling around as the Asian markets open without a whole lot of direction in either way, up or down. So we're waiting for the direction to take over, but it's going to have to break that 45.17.16, and that's exactly where the hourly 200 is sitting, and it's holding it. And then guess what? Then we look here, and the hourly 50 and the hourly 20 are supporting it. So it's not picking up any steam anywhere. I'd be looking forward to pick up some steam, break above the 200. That likely will be why it will take the steam and then just keep going. It's got to head towards 45.72. Then it's got to head for these highs up at 45.89, get itself above 4,600, and then eventually above that 46.31. Then we start running into some resistance, 46.50, 47.14. Now, in essence, a C wave doesn't have to go up to 618. A C wave doesn't have to go to 100%. These are the most common areas for a C wave to finish. Does not mean that it has to. If we're getting above 46.31 and we're counting 5, it could be a C wave. There could be enough outside downside pressure out there on the market because of the bonds, because of interest rates, because of inflation. That what has caught a lot of this and created those 2 days of downslides that we had. So one nice little update does not make much. So it has to prove itself. But if we can count 5 waves up and it's to a new high, I'm just saying we'll take it when it comes, and we'll look at it and we'll look at market conditions. Still, I think there are plays to make. It is tradable if that's your choice. Okay, so now go back out to that daily chart. Now, scenario number 2. Scenario number 2, still running in parallel, would suggest that this, where is marked A, is actually the completion of intermediate wave 2, and therefore we are going to be dropping out of the heights, so to speak. And what we have is 1 of 3, 2 of 3, and 1 of 3 of 3. If you remember, I continue to talk about that when this decline kicks in, and it's going to kick in again in a third wave, it is going to be fairly destructive. I expect it to pick up steam, speed, and just start blasting through support levels and through moving averages. Now, on the daily, that would suggest we're still sitting basically with a pretty flat 200 moving average. This is an exponential. You could run a simple, which I may have done on my daily chart, I'm not sure, will also show that it ends up being a fairly strong line of resistance. It's not even come down and tested it yet out of this initial swing lower. So it's kind of finding its support and its area at the 50, the daily 50. It needs to break both without more than a sneeze. Just like hachu, and we're through it. And I'm serious. That's the speed I think it's got to go to establish the sellers are fully in control of the market and we're going down. That's what I mean. And when it does, it is going to change this Fibonacci. So I'm going to remove this. I'm going to pull this open just a tad so I can see we got the right ones. We're going to that high. We're going down to that low. That's the ES, but it's going on this month basis. And then up to that high. And what we have are the levels coming down. Now, if indeed intermediate wave 2, and this is an intermediate third wave, and I have to compare it Fibonacci-wise against the first wave, that's what I'm looking for. For intermediate wave 3 to eventually end up at 34 to 3,500, somewhere in there, or lower, but not 100% at 39.30. That's going to provide some support. This likely will get broken pretty quickly because you see they're pretty close together. It'll provide a pause, but I think we do get it through it. And a strong enough move will push through very quickly. Then we fall very freely down to here. Might be a little chug and a tug all the way down, but then if it breaks here, we should find our way down to this level pretty quickly. And that takes us below the bottom of intermediate wave 1. So that sets us up for much stronger for the pickup. And then eventually down to here. We do have capabilities of going even further. Now, remember that I have been talking about, at least in the NASDAQ, that I would suspect that the initial 5 waves down, the initial primary degree A wave, I think finds its low around 2175-ish, up to maybe 2400, some in there, but more likely down here. And that would put in wave A of the super cycle wave 4 correction. So ultimately, under this scenario, by the way, lots of trading in between, a bottom of the A wave will get a kick butt B wave, and that B wave could do all kinds of crazy things. So there'll be plenty to do. So, and I'm going to give you this point right now, because what's important to kind of keep in mind as a trader, there's plenty to trade no matter what direction the market wants to go. If it's doing it suddenly and quickly, tons of opportunity are going to be flying by. You just have to be able to get yourself out of that chaos and be able to look and see where premium is and what trade you want to do, and then how you want to construct the trade and how you want to get it on. Depending on which platform you use, many are now capable of putting on multiple-sided, 4-sided, 5-sided option trades at a click. One of them being Tastyworks, the other one being Thinkorswim. So that I'm aware. I'm sure there are others. So if you know of others, leave them in the comment box so that we all can take a peek. So in any case, there'll be plenty of trading to do. Now, for tomorrow, it is an expiration. It's a weekly expiration. So I would suspect we're going to get some play. The way the market was left and the way it continues to hold, my suspicion is that we will continue to move up. Now, whether that is going to be starting of the next larger leg up of what could ultimately be that minor C wave, or this is just wave 1 of 3 down, wave 2, you can work out your fibs, putting it from 45.88 down to that low, 44.44, and then you're going to get your fibs on the way up. Wave 2 just cannot, actually from here to here, wave 2 cannot overlap wave 1, but the scenario number 2 carries right with it until scenario 1 takes the market above 45.87. Wave 2 cannot overlap or exceed the price territory of wave 1. It's a rule. So that would be where we would know. In the meantime, we carry both scenarios. It could get all the way up into there, so it can rally again tomorrow and then still turn and drop dramatically and quickly. So for scenario 1 to be in force, it needs to break that and not look back. For scenario 2, it needs to hold below it and drop without looking back. Okay, that's where I'm going to leave it. Continue to follow the moving averages, follow the price action, stay out of the chaos, have a trade plan, and have a great Friday. The next update will be Sunday, April 10th.